Please switch off your volumes. We start today's market talk. Market participants are missing the basic truth that stock prices ultimately reflect underlying business performance over time. So the Warren Buffett's investment advice seems increasingly countercultural despite its proven effectiveness. His emphasis on understanding businesses rather than predicting price movements appears primitive compared to modern quantitative strategies where everybody is only looking at technical analysis. But technical analysis is of no use because without earnings, stocks can be moved any amount of levels, but without earning support, it is not sustainable. Now we'll see the market outlook. A surge in US jobless claims to a 4-year high on Thursday cemented investors' bets for a Fed rate cut next week. So this is given. So this has brought the dollar index and bond yields down and lifted all three US indices to new highs. Now, next thing which impacted, so this was the first thing which has brought in a total amount of positivity all over the equity markets all over the world. Now, the second was Donald Trump seems to have softened his stance towards India, however, affirming a special relationship with India. So he expressed optimism about imminent trade talks. He emphasized positive and forward looking, comprehensive, and global strategic partnership with teams working to conclude negotiations swiftly. So, this was the second thing which started the rally this week. Now, the bigger problem is that the stable, globalized, low inflation world that was the foundation of the decades long bull market is over. In its place is the painful and violent arrival of new fragmented, conflict ridden world order being witnessed in the form of protest and polarization across the globe. So, era of low inflation is ending due to relocation of supply chains, emphasis on security, higher fiscal deficit due to increased spending on defense due to industrial policy. So, the point is here that the defense is going to be a prolonged theme. Weaponization of trade with high tariffs and sanctions has driven up the prices, which is leading to inflation. Now, inflation in the US is rising, but the Fed is choosing to focus on slowdown in jobs because that is what the people want. So, stagflation will be a logical outcome. But in the midst of all this mayhem, the stock markets have remained remarkably cool. So nothing is impacting them because of massive injection of cheap money by central banks has been the rising tide that has lifted all the boats, inflating asset prices and creating a disconnect between financial markets and economic hardships faced by the people. So it is not only equities; all asset prices are up. So metals are moving up, the silver, gold, Bitcoin, real estate, everything, all asset prices have been inflated despite all the turmoil which is there in the world. Now, in between that, just to see what is happening with Indian government bond yields. So the bond yields dipped after the GST cut, where they said that the dip or the decline in revenue is going to be around 48,000 crore, but I don't think market is buying it. So then again it rose. The bond yields are rising, and it has reached that upper trend line, downward trend. So if it breaks through this, the Indian bond yields will rise further. The other problem is that the Indian rupee is declining with respect to US dollar. Now, this is slightly surprising because even the dollar is declining. So, actually, the rupee should have been strengthening, and this is negative actually because we are a net importing economy. So, it increases our uh, current account deficit actually. Now coming to FIDI data. Now FIs have considerably reduced their short positions in index futures. So they have 1.72 lakh short positions. They have added long positions in Nifty, which is very clear. So Nifty was strongly bullish. In terms of options, they are generally squared off all their call options, and they have bought some puts. So right now they are on the bearish side. That means they have bought puts and they have sold index futures positions. Now pros have turned over from the bullish side to from the bearish side to bullish side. They are positive on index futures. They have bought calls and they have sold puts. So now the pros are firmly on the bullish side. Now clients, they are medium term index futures long positions, which they are squaring off or they are hedging with their by selling around 1.36 lakh call options in index options. So this way they are hedged, but in terms of puts, they have sold around 2.96 lakhs puts. So that means they are net bullish. So the positioning is FIs are uh, bearish, while pros and clients are now bullish on the bullish side. But both sides are now reducing their extreme position. So let's see which direction it moves. Now, what has happened is from 1.68 lakh short positions in index futures, FIs had increased it to 1.91 lakh by around 5th September, and then now they have brought it down, and that is reflected in the how the index has moved. For last around 8 sessions, index has been positive, gradually moving from around 24,600, 700 levels to now 25, 150 odd levels. Now coming to US, so see what happened is on Wednesday the PPI slipped on month-on-month basis. That is producers price index, which is their wholesale price index. Then on Thursday the CPI for August came in higher than expected. But the jobs data has been weak. So after cooling of labor market, traders are convinced that Fed will deliver a 25 basis point rate cut this week, followed by two more 25 basis point cuts in October and December. So now, predictably, the 10-year yield has come down to around 4 level. It has dipped roughly 25 basis points. So one rate cut is already priced in. So you're seeing a converging a triangle getting formed. So that means it will break out in one direction, and what it is looking like is that it is going to break out in the on the downside. So the bond yields are expected to go down. Dollar index has also weakened a bit, so it's come down to around 97 level. So let's see from where it goes. Brent crude is at the similar level, just was up slightly, but it is not going anywhere because there is adequate supply and not much of extra demand in the world. Gold is up now; it has changed the trajectory. So so if you see over the period of the last 2 years or so, the upward trajectory has constantly gone up in gradient, and now it has gone up very steeply high. So from around 33.50 dollars, it has moved quickly in 3 weeks to $3650 per ounce. So it's a steep rise. Now silver, as I told you last week, it is it is knocking at the rising trend line, and it has broken through this. So now this will also go up because it was till now enclosed in this rising trend line pattern, but now it has broken through. So silver will also should also do well. Copper, nothing much, just 1.67%, not much change as such. Bitcoin was also positive because if the equities are positive, Bitcoin is also fully correlated with that. So it was up 4.39%. S&P 500 was up 1.59%. It is above the last high very clearly now, and it is making fresh high. It was helped because Oracle, though their results were mediocre, but their remaining performance obligations (RPOs) became 4x. That means the orders which they had to execute have become 4x to $455 billion. So the share had surged for 36% just in one session. So Nasdaq was also up; it is constantly moving up, and Dow Jones is also moving up. Now, coming to India, India VIX has come down to the lowest possible levels of around 10. So there is nothing now here in India VIX now. So it is at 10.12 and it may generally stay at these levels. But it's okay. There's not much of volatility. It is RSI is also now oversold. So expect some bounce, but not much. Now coming to Nifty. So if you see here, over the past 2 weeks, Nifty has pulled up around 700 points, which is showing a sign of improving sentiment and technical strength. It is above 20 EMA on the weekly chart. Coming to the daily chart, uh, it is on verge or it has already broken out from a triangle pattern index, and all the moving averages are all the present position is above all the short term and long term moving averages. So it is above all the moving averages, which have also started sloping upwards. So if you do a simple fib extension of this rally only, a possible target would be approximately 25,300 or 25,400. This is pretty simple. So this should not be difficult. And if you see, RSI is also above 60, indicating a strengthening momentum upwards. But the problem is that the last high from where it had reversed for after the GST announcement was around this 25,150 level. So this should provide some resistance and this zone also. So 25,150 to 25,250 should be a immediate hurdle. Above this, then the rally can go to 25,600, 25,700 in the short term. And downside should be somewhere in this zone of 24,880 from where actually the rally started. 24,880 was the level where it closed. Once it closed at 24,880, that was when the this rally has started. So that should provide support. So it basically depends on how they want to take it. It can cross this. So the point is, if you want to go long, let it go to around 25, 170, 180 level and then try to go long, because it can directly go to 25, 150 and then reverse from there, come down a bit and then again go up. So just wait and watch before taking positions. On the hourly chart, so if you see, it has reached that previous level of previous high of around 25 150 it had made. So from there it took some resistance on Friday, but then no resistance is taken out in the first go. So maybe on a second try it can go, but on hourly chart it is positive as it is above the 20 EMA. Now coming to Nifty Bank, it has also two good weekly candles, moved 1200 points in last 2 weeks. So coming to the daily charts, it remains below the 50 and 100 EMA. It is above the 20 EMA, but 50 and 100 EMA, it is still below. So it is weak. So broader trend needs confirmation. It took support at 200 EMA, strong support. So after that, it has risen. So let's see. And daily RSI is still sideways in a sideways zone. So it has to go above 60 to gain some strength. So, but Nifty cannot go up solely because of IT and others. Banking is an important ingredient, so it has requires that support. Now coming to major stocks, the Nifty Bank is subdued because HDFC Bank is subdued. It is just moving around this it's 100 EMA, so at 966 odd. So it has to go above this 975, 780 level to gain some strength. Otherwise, it can go down. Similarly, with Reliance, it is totally consolidating now. Around the all averages have converged. So let's see which direction it goes from here. The stock which is providing momentum is Infosys. So it has formed a Adam and Adam double bottom pattern on a daily chart, hovering around the neckline right now. So if it takes out this 1550 level, it is right now above the 20 and 50 EMA. So above these levels will provide resistances, but if it takes out 1550, then it will go to 1600 and then higher. So right now there is a strong base and strong momentum with this stock right now. So we may see a sharp upside above 1550. FMCG is nothing great last week, but it has been on the upside, but it could not sustain high levels. So at high levels, it gets sold. IT was strong, 4.26% last week. So good rebound. So let's see where it goes from here. Consumer durables declined 1%, so nothing great here. Metals is the one sector which is breaking out, as I told last week also, that metal index is breaking out and it broke out from there basically because the rate cut in the US and decline in dollars. So all the metal stocks are doing well. Auto index is also doing well. Now it is closing towards its previous high. So let's see if it can take it out and then move higher. Uh, And the other sector which is moving up is Nifty India Defense. So if you see here from a declining trend line, on it was moving up, and on Friday it has just broken out above that. So the bigger stocks in the India Defense Index, which have a lot of weightage and which are in FNO, uh, namely HAL, BEL, BDL, and Mazagon Dock. They should do very well because of this momentum now. So they should be good for trading now. Midcaps were up around 2.39%, so it is moving up. Let's see if it can go to that previous high, not very far from there. And small cap index was also now above to 20 EMA on the weekly chart, so it is positive. Let's see if it can move up. That means the broader market has to be taken up. I'll cover two stocks. First is ACME Solar. It is among India's top leading renewable energy independent power producers with 2.9 gigawatt of operational capacity and a strong commissioning pipeline that is expected to scale capacity to 7 gigawatt by FY29 expected. It develops, builds, owns, operates and maintains utility scale renewable energy projects supplying clean power to a range of off-takers including central and state government backed entities. It is strategically transitioning from traditional utility scale solar projects to more complex and integrated renewable energy solutions such as hybrid systems and firm and dispatchable renewable energy FDRE projects. The difference between solar is a pure solar project, then you have wind projects where total it's basically doing wind energy. Hybrid are solar plus wind, so that what happens is in the night time there is some capacity which is available, and FDRE is where along with solar and wind you have a battery energy storage system, so that when there is no renewable energy, then the battery provides the necessary power. Now, FDRE projects achieve an average capacity utilization factor of 50%, significantly higher than the 28% CUF of traditional solar, enabling greater energy generation from the same installed capacity. The rising share of FDRE hybrid contracts is expected to boost the overall revenue per kilowatt hour to 3.7 rupees in FY28 from 3.4 because of higher capacity utilization factor. So each FDRE project has three major components: solar modules, wind turbines, and battery energy storage systems of total project cost, softening solar module and battery prices to boost returns. In battery energy storage system, basically they use the LFP batteries where the prices are coming down. So they should be benefited because the projects are done and then the prices come down, so their cost of acquisition goes down. Now, coming to their earnings, so if you see here, they did around 584 crores of revenue in Q1 FY26 and 131 crore of profit. So if you see year on year, the revenue was up 72%, EBITDA was up 75%, profit after tax from 1 CR which they made in Q1 FY25, it went to 131 crore. so 130x now. And generation million units was up 107%. So they did well. They commissioned 350 megawatt projects. They won a maiden standalone BESS project of 550 megawatt from NHPC, signed PPAs of 550 megawatt, 3.1 gigawatt of BESS ordered from leading global energy suppliers. So this is basically they ordered from Chinese supplier, Zhejiang Narada Tirana Energy. So they ordered this to them for basically doing their projects. So they have recently commissioned few projects, and net debt to net worth is 1.7x, and bill receivables at 36 days. So the cash flow is a problem. So the contracted capacity to ramp up to 7 gigawatt. So presently they are roughly at uh, around 2.9 gigawatt. So they should take it to 7 gigawatt with a mix of solar, wind, hybrid. So what is going to happen is that the mix of basically in the mix the hybrid and FDRE is likely to go up to higher level. So that will improve their margins. So they have operational capacity of around 2890 uh, megawatt right now, and under construction is 4130. So where they have PPA signed and LOs awarded both. So they can easily scale up to 7 gigawatt. Now their capacity utilization factor is 37%, is expected to be around 37 to 38% now in future versus 28% in FY25, because of addition of, if you see, more addition of uh, wind, hybrid, FDRE, etc. So the average capacity utilization factor will go up, and rising share of FDRE in hybrid to enhance tariffs to 3.7 kilowatt to from 3.4 kilowatt hours. So if you see here, this is in millions of rupees. So they are expected to do around 2,300 crores, and then 4,200 crore and 6,400 crores in next 2 years after that. The problem for them is debt. So the interest cost is also going up. So that has a big impact. So they are uh, for all these projects, that is the big risk, that they are very much leveraged. So the total debt is also going up at the same pace as the revenue is going up. So this is a risk, and that the cash flows need to be watched. So if you see, the EBITDA margins are at around 70% levels. Gross debt to equity is also going up. So from around 2.9, it is going to 5 to 7, which should be a big risk, because then they become uh, big risk. So the point is EBITDA has to be keep increasing. So operating profit has to keep rising. Otherwise, they have a problem. So they are expected to do around 7.7 FY26 EPS and 10.5 in FY27. So taking a mean of around 10, or let's take 10 for FY27, uh, at around 30 times, 32 times, it is fairly priced. So there is one of the brokers has done a DCF valuations where, taking their possible EBITDA in the next few 4 5 years, they have reduced it and brought it their fair value to around 380. So which is roughly 20% upside from here. So let's see. So this stock has been, so if you see the chart, the stock has been constantly going up, and in the last from July onwards with increasing volumes, so it was slightly overbought, and now the RSI has reached 68, so it is at good decent momentum. It's around 318 odd levels. So let's see, but I would recommend seeing all the issues. Though the earnings are superb, right? They are growing at a good pace. Profits and revenues are growing at 50% plus. So, and it is so seeing the growth in earnings, but then the earnings also taper off. So we'll have to see this, but uh, it has broken out above this 305 odd levels, 305, 310 levels. So it should go up now from here. So this should be a decent stock to hold. Now the other one is Samvardhana Motherson. Somebody had asked about this, so I'll cover this. Business divisions, it has got following business divisions: wiring harness, vision systems, modules and polymer products, integrated assemblies, and certain emerging business. This is basically a auto ancillary. So in emerging business, they have elastomers, lighting and electronics, precision metals, technology, industrial solutions, aerospace, logistic solutions, health and medical services. And I don't know why they are not into. They are into defense also because everybody is into defense. So one of the world's largest manufacturers of components for automotive industry. Non-automotive revenue grew 8x to 5,800 crore, contributing around 4.5% of total revenue. So they are diversifying into uh, non-automotive revenues also. Key growth verticals include aerospace. Every Airbus and Boeing aircraft now carries Motherson parts, medical imaging solutions, logistics, consumer electronics, and semiconductors. The name is basically they wanted to show the mother son name was taken because they feel that because this is a good bond, so they wanted to be kind of bond with their customers. Hence, they gave this name. Vision 2030. They came up with the Vision 2030 recently. Aims to achieve revenue of US 108 billion, representing 4x growth ambition. Now, just a point is that can they grow their revenue 4x in next 5 years? I have my doubts because they could not achieve even their vision 2025. But it is good to have a vision uh, document. The company expects to maintain 40% group ROC and adhering to 3x CX 10 diversification principle. It means no customer, country, or component contributing over 10% of revenue. Presently, I think 20% of their revenues are coming from Mexico oblique US. By adding products such as digital interior mirror, driver monitoring, and occupant monitoring systems across the product portfolio, the company aims to increase the content per vehicle going forward. On the aerospace side, the company supplies structural support, landing gear components to Boeing, as well as outer skeleton of emergency exit doors. It is the sole supplier of vent flap assemblies for Airbus 321 program, along with providing fuel flow components and titanium-based engine hubs for Airbus. In helicopters, the company manufactures exhaust frames for turbine engines primarily used in the PW210 engine manufactured by Pratt& and Whitney, Canada. For defense, see here we go. It delivers wiring harness solutions that ensure reliable electrical power and data flow in combat environments. So, in basically, they have uh, five business segments: wiring harness, modules and polymer products, which is roughly 50% of their revenues, vision systems, and integrated assemblies, and then emerging businesses. So they want to grow this emerging businesses. That is one which is having the highest growth. Rest are around, they are having basically single digit growth, and EBITDA in some of them is declining only because of various issues and structural challenges they're saying in Europe and US, etc. So if you see here, uh, revenues for the full year and quarter wise, so if you see they did around 32,000 crore of revenue, out of them around 15,000 crore from was from modules and polymers, so roughly 50% uh, in FY25, and generally it is reducing because they're trying to increase the other wiring harness, vision systems, integrated assemblies, and emerging businesses. So they're trying to reduce the the reliance on module and polymer because the EBITDA is lower percentage vis-a-vis other segments. But between Q1 FY25 and Q1 FY26, though there is a single-digit revenue growth, uh, but the EBITDA has percentage has declined, and EBITDA also declined. So that should be a concern. Again, their problem is debt. So they had at one time net debt of around 16,000 crores. Now it has come down to 11,000 crore, but so this has to be washed because This is a concern for this company. They do basically acquisitions, so because of that they take on debt. uh, Samvardhana Motherson annual revenue, they are growing at around 10% in terms of revenue. Margins are stable at around 9%. EBITDA margins and PAT margins around 3.4, 3.8. EPS, they are expected to do around 5.4 in FY27. And so let's take around 5. So at 20 times, around 100 rupees should be fair value. ROE, ROC is improving. What they are likely to do is, this is in millions, so around 1.3 lakh crore of revenues in FY26. So around 15-16% growth is what they are targeting, with EBITDA growth which is likely to decline because of some issues. So adjusted net profit of 4450 crore. So EPS FY26 4.2 and 5.4 they are saying. So let's take around 5. EV EBITDA is declining, so it's not very expensive stock. That's my point. Why it is not expensive is also because of all the uncertainties and debt. Because because finance cost is high, so that is a major portion. So if they can reduce, they're trying to reduce their finance cost. So if they can reduce this, that's what they are targeting, trying to reduce their finance cost. Then it will directly go into, and that is one which is actually going to improve the PAT. So coming to the charts, see it declined from around 140 levels to 70, became half on this tariff-related issues with the US, because their major supply is to Mexico, where all the auto companies are producing for US. So that was a concern. So it went up, now it came down, and then in the this is a weekly chart. So last week they came up with this vision document. So the stock has gone up 10% because they were kind of subdued now around 93, 94. So I would still wait for it to come down because it's already moved up 10% in a week, for it to come down, and then depending on the situation, buy it. But there is nothing compelling about this right now. I finished. Okay, I had to cover one more stock on a request, Shakti Pumps. So if you see here, the chart of this stock, this is a kind of a declining uh, price. It got a bounce on Friday because they got a order, plus plus there was some positive commentary from the government about continuation of PM Kusum scheme. Now the why the stock is declining, because the revenues in FY 26 Q1 were slightly subdued, because they have been growing very well. Now the revenue growth was around in single digits, so that's why the stock has declined. So, but level to get this stock, because the long term story is somewhere closer to the 780 odd level where it took support, and then hope for this it will come down, because now it will move as per the Q2 earnings now. So right now the stock is in momentum, but uh, don't buy it above this 880 900 levels. You should buy it once it goes down, and then look to hold it for longer term. I finished. I will take questions now.